Hi, welcome to the Market Alert for Friday, the 24th of October 2025. So everything's up amid geopolitical chaos. Flopping continues with everything up: crude, crypto, stocks, gold and bond yields amid geopolitical chaos. Expect that to continue. Particularly today, stocks rally and bonds sold ahead of CPI, while orange oil surges on US-Russia tensions. Well, that's to be expected, isn't it? So we'll see an increase in all of the fuel prices by the end of the weekend. US stocks rebound ahead of CPI, while oil surged following US sanctions on Russian oil majors. And then CPI preview, which we've got today, likely a miss, but mostly irrelevant. So the focus really, according to this, is not going to be on the CPI. It's hard to see a world where tomorrow's CPI is a major event for the broad-based index level of the equity market. Yeah, that's because they're completely disconnected. And that's why, because obviously there are bigger institutions that have control of these markets. I'll show you that when we come to the FT 100. But despite all of this, the US hits 38 trillion in debt. So as the Dow, the S&P start to head up towards the all-time highs once more, the US hits 38 trillion in debt after the fastest accumulation of 1 trillion outside of the pandemic. And yet the markets are making all-time highs. It's just smoke and mirrors, isn't it? It's the Twilight Zone on steroids. Economic news today, well, there's just the CPI really, but then that seems to have been discounted by Zero Hedge as a non-event. So we'll just have to wait and see, and I'm sure attention is turning towards the geopolitical side of things, particularly with the sanctions against Russia. Obviously, Putin's quite peed off about this, and I'm waiting for the retaliation. Apparently, he sent aeroplanes over Lithuania. You couldn't think then what it was called, over Lithuania, and NATO are aware of this. So you can see where this is heading, as Gerald Celente has said on many occasions. You know, when the system fails, they take you to war, and we can see the system is failing. The whole thing at the moment is just levitating and being supported by the central banks. And then once, of course, the reality kicks in, and it'll be a different thing. And then the war starts, and then the bankers make a fortune again. That's how it's worked time immemorial. So, not that I wish to see any wars whatsoever. Absolutely not. But that's how the system works. The bankers are behind all of the wars. Right, let's have a look at the markets and kick off with the Dow. So in the Dow yesterday, we had a reversal, which you can see there. We're above the 5-bar moving average, and now we just got to take out the previous all-time high, 47053, and then the latest one at 47137. Yeah, that's it. That's the latest one. Yesterday, same as the day before, market was sideways, cash market opened, and off we go. So we can see that these markets are just being pumped to the upside by the algos, the AIs, the high frequencies and everything else. This is not real buying anymore. This is not real fundamentals being reflected in price charts. This is a complete disconnect from reality. And again, if you don't take the money out of these positions, eventually this levitation of prices is going to burst. And when it drops, it's going to drop like a stone. When will that be? I don't know. But what I do know, it's going to be catastrophic when it does. So at the moment, we can see that everything's fine and dandy as far as the charts are concerned. We know this is not the case. And as the headlines already stated, that the geopolitical uncertainty is dominating, but it's not being acted upon in a negative way, but a positive way with stock prices. And in the German DAX, up yesterday and set to be up today as well, to have another go at the golden ratio, the 62% retracement from the high down to the low. It looks like we could be set to do this today, again with those CPI numbers, even if they come out better than forecast. Of course, the issue is the government is still closed down as well, so whatever numbers they come up with today, if they do release, will be difficult to verify. That could be normal, to be honest with you, because that's why these numbers are known as the CP lie. They make the numbers up as they go along. That's why you only need to visit Shadow Stats to get the true figures of inflation. In the 30-minute chart, we were down to begin with, and that's not unusual either. And then it was a one-way bet all the way in the market up on the overnight there as well. In the S&P 500, you can see we're on for a new all-time high today, 6765. We're going into the weekend. They like to keep the markets moving up and keep them positive over the weekend. They can sleep easy, and that's what the picture is showing there in this chart. Again, sideways to lower, cash market opened, and off we go. Like I said before in the market, look, there's a lot of money sitting on the sidelines looking for somewhere to go, and maybe they're just pumping it into the markets because otherwise they're going to make nothing on it, which is also giving the current illusion that everything's fine in the stock markets. Particularly in the UK, yesterday we made a new all-time high at 9579.2. Prices continue to move strongly there. Goodness knows why. Rachel from accounts out next month. Today see headlines of putting a penny on tax, which is obviously a breach of the manifesto PR that they put out over a year ago, that there would never be any personal income tax, but obviously they're going to change their mind. Well, what a surprise. Market was up, it pulled back, and that was the last time we saw any selling. The market has then maintained an upside trajectory, which we are seeing continue at the moment. And overnight, US dollar starting to move back to the upside. We're still trying to get above this high of 99.56. See if we can get back to 100 is the objective here. And it looks like we could be set to be doing this, which is no good for the metals. It's going to add some downside pressure. So let's have a look at that. So in the metals, silver, I'm afraid, is looking for a sell-off again today. As far as I can see, I don't think it's going to stop until we get down to the 50 EMA. If we go back to this recent low up to here, and you'll see the moment we're a 50% retracement, 62 takes you to the golden ratio. It's looking weak. The dollar's going up. It's Friday, Smackdown Friday. Looks like it's set to return during today. So don't be surprised if you see the silver market getting smashed once again today. And there you can see yesterday it managed to hold but didn't make any progress. That's an indication of weakness in and of itself. And also overnight you can see that they're moving the market lower now. So expect this to accelerate through the day down to yesterday's low and then beyond. Meanwhile, in gold, also this too is starting to look weakish as well. It's got to stay above the 20-bar moving average. It's got more chance of doing this than silver has of staying where it is at the moment and not retesting that 50 EMA in the daily chart. And there's again, you can see this is reflected in this chart. It's also reflected in the gold silver ratio, so let's have a look at that as well. So in the gold silver ratio, again confirming that we're expecting lower prices, we can see that this is moving to the upside. 89 is where I think this is likely to go. I wouldn't be surprised one bit if we go down to the 50 EMA in the silver price in the daily chart. Actually, what was the price down at that level? Let's just have a quick look. Yeah, we're looking at 46, aren't we? So another $2 lower than this. Not a problem. As I say, with the banksters having control of it, what we need to do is take out yesterday's low, take out the low of Wednesday, and then down we go to 46.18, particularly if inflation comes out higher than forecast as well. They'll use that to their advantage. So the gold-silver ratio, like I say, is moving to the upside. No surprise. You can expect more than that. And despite the fundamentals showing that there is a massive demand and shortages and delivery delays, this market is not going up anytime soon. Because the bankers have got control once more. So there we go. Not what you want to hear, not what I want to say, but that's how it looks. I've been here before, as I said, before we saw the big smackdown on Tuesday. If you go back to that alert, I said I've seen it before. We get to a certain level, then they'll come in and just give it a monkey hammering, and they have, and they can continue to do that as well until they've got $10+ low below the highs. Right, so let's move on and have a look at the trades for yesterday. So in the German DAX, the market rallied up and then it went very quiet as we got close to the opening of the cash market, which then saw the market move higher and then failed to hold, and then was sent back to the downside and then became very quiet in a sideways range. We had a buy signal there that moved higher, then failed at the 200 MA. before moving lower, as you can see there. And then we had another potential buy, but this time this one failing to move higher, and then the short continuing the downward trend that got established earlier on after the open. We then go over to the US market, which again moved to the upside, and so did the German DAX. There's no buy signal there because we were long before the 2:30 opening. We then had one later on though, after we had a bit of a pullback there, which you can see the buying coming into the market, and then prices following, moving it to the upside once more until we got to the resistance there. And then into the evening, of course, things get a little bit quieter, which you can see there. So that's where we are with yesterday, and overnight we're already moving to the upside. No surprise there. We're looking for all-time highs in these other markets as well, particularly the German DAX, because it hasn't made one for a while. So then again, no surprise there. It's Friday, they want the stock market up, but expect a bit of a move to the downside first, shake out the weak ones before they move it back to the upside. Okay, that's it for this one. Watch out for all-time highs today in the S&P and the FT100 to continue. In the metals, sideways for gold and sharply down for the silver price is what it looks like for today. Have a great weekend, and as ever, thanks for watching. See you in the next one.